Actually, Fikri, I don't see on my screen now because I'm sharing screen the opportunity to pause the recording. So could you go ahead and do that for me?
Sure.
It's usually at the top left, but for some reason I don't have it popping.
Yeah, I don't see that option either.
Okay.
Go ahead. You've got control, I think. Fikri does.
I do. Yeah, I see it now. Thank you.
Awesome. Thank you. Fikri, would you mind? Perfect. So just as a reminder, today's webinar is being recorded. And hello, everyone. Great to meet you. My name is Susan Melnick, and I'm the communication specialist here at ASAP, which is Accelerating Support to Advance Local Partners. We are a USAID PEPFAR program. We are very thankful to USAID and PEPFAR for allowing us to put these on every week for you. Today's presentation is Subaward Management, Creating Pre-Award Assessments, Managing and Building Capacity. And we have plenty of information for you today, so let's hurry through these quick opening slides. So just a couple of notes. We like to use the Q&A box. If you've used our webinars before, you're probably aware. It's the box at the very bottom of your screen. It is different from the chat box. And if you could just go ahead and put any questions that you have in that box, we'll be able to track them. And Doug has a couple of different breaks throughout the webinar today where he's going to be answering questions, and then he'll take the remaining questions at the end of the webinar. So feel free to use that. You can certainly use chat if you have any other questions or comments for us throughout the webinar, but if it's specifically about the presentation, please use the Q&A. We have one poll today during the webinar. It's going to pop up about 15 to 20 minutes before the end of the webinar. And it'll pop right up on your screen if you're using the current version, most updated version of Zoom. And as usual, our presentation today will be recorded and it's going to be on the website. We'll send the link out and I'll share it in the chat as well. This particular presentation will be available for 30 days on our website. And there are a variety of other webinars that are available on the website as well. So this is actually our 75th webinar. So we have broadcasted to date, 74 of them. We've had over 15,000 attendances in these webinars, and there are a number of them available on the website. So you can go back through and take a look at anything that you missed in the past. Let's see. Most of our webinars are available in 3 different languages. So this one is an English webinar, but then we do often conduct them in both Portuguese and French as well. So stay tuned for more information about upcoming webinars. You can go to the website and filter by language to see any of the webinars that have been held in those specific languages. And as part of the presentation, we include a recording of the webinar. On some of the webinars, we also have a presentation slides that you can download. And we have an upcoming webinar, another one in March. So next week on March 29th, we'll have a business development webinar. And I'll make sure I include a link so that you can sign up for that as well. All right, well, it's now my great pleasure to introduce to you Doug Franke, who's the Managing Partner for Sustainability Solutions. He's going to be today's presenter, and he has a ton of information for you on Subaward management. So I'm happy to pass it over to Doug now.
Great. Thanks so much, Susan, and welcome back to everyone who is familiar with our presentation series, as Susan said. First of all, we'd like to thank USAID as she has, and then I'd also like to thank ASAP for making these available. A fantastic IntraHealth-led consortium, I think, doing incredible work. They've been doing it for quite a while, and hopefully will continue to do it in the future. So if you, hopefully, can someone put up a hand? You can say you can see me. You just want to see, we want to see your participants can use the things at the bottom. Can someone do that? Susan, I'm sure you can, but just checking. Okay, super. Thank you. Okay, we have so much information to share with you today because subrecipient management is very, very hot. And I just want to say, Susan introduced me. My name's Doug. I have 40 years of experience working with USAID. I was 26 years with Price Waterhouse and about 15, 16 now with Sustainability Solutions. This is what we do. We work with you. We work with missions. We are auditors and work with auditors to make sure everyone gets this right. Okay, so we're quite excited to be given the opportunity to cover this topic. So this topic, as Susan has said, is about creating pre-award assessments, managing and building capacity, but there's so much information that, of course, we can't get all this done in 2 hours, but we're going to try. And the bottom line is any question you have, I'll do my best to answer. I will stay until midnight tonight if we have to answer all your questions, but it tends to happen, and every question is a good question. And we make no mistake, we want you to ask questions, and when you put the questions in there, don't worry, I don't say it's Tom from Kenya or it's Jim from whatever. We don't go into that, we just say the question is, and then obviously we ask your question, and so everyone can hear it. Okay, so let's get started here. I would like you to know if some of you have been on either our ASAP courses before or just any of the training programs that we do. I know through FPD, we do a professional series. We're in the middle of one right now with FPD in recipients. So just please put your hand up if you have been through one of the sustainability webinars in the past 2 years. Please, anyone? Hands up. It gives me an idea of some of the things when I say I have to recover, but a lot of this stuff, I'm going to assume you are all brand new to being a USAID prime or subrecipient. Okay, let's jump into it. So I'd like to start with the structure of, what are we talking about? So we need to be aware of relationships, and we start with, of course, USAID as the agency, the donor at the top. And it is through the AO or the AOR or the OFM or the IG, we frequently call it the RIG, that we are going to work with. And I just go to the next slide to say you should know AO is agreement officer, AOR is technical rep, and so forth. Okay. So the point here is USAID, the agreement officer, basically working with his or her team, crafts a award for the prime. And they have very specific rules they have to follow what to put into your award. And then they, through the AO, who has the warrant to bind the US government, you get your prime award. And then, of course, the AOR, who works with the AO, she or he has what's called substantial involvement. And they're the ones that are going to be working with you on a weekly, daily, whatever, monthly, quarterly basis to achieve your results. And of course, Office of Financial Management, known as the Controller's Office, works with you to pay your vouchers, perform your pre-award surveys, helps assist with the audits, how the audits are run through the OFM, and so forth. And then finally, the Africa Regional Office of the IG. I'm dialing in here from South Africa, and about 25 clicks up the road, we have the Inspector General. It's a fantastic group. I was speaking with them this morning about some questions for you about fixed amount subawards. So we'll be talking about that. Okay. So pretty much for all of us, these people are in our country or in the region. Okay. Could have a regional program. Certainly South Africa has a regional office that covers Swaziland or Eswatini, Lesotho, Namibia. And so there may not be an AO in every place, but generally they are in our time zone. Okay, so the bottom line is USAID has a relationship with the prime only. USAID does not, no agency has a relationship with their subrecipients. So it's going to be important when we talk about getting into our consortium that you realize this. As a subrecipient, you do not have a relationship with USAID, only the prime does. Okay, so through the prime, they are going to have to create a subaward, which is what this is about. So basically someone at the prime organization serves as the agreement officer. And they tend to like to use the words standing in the shoes. The AO equivalent at the prime stands in the shoes of the AO and has to make similar decisions and craft your subaward like USAID has done for them. Okay, that's quite important. So that person, can rarely be as competent as a real AO because AOs spend weeks and weeks and weeks every year, it seems, getting better and better with their skills. Okay, it's an incredibly skilled position and one not to be taken lightly. So if you're going to serve in this role for your prime, then make sure you do your homework to do it correctly. Okay, AOR, again, that could be anything, monitoring and evaluation, program management, whatever else. That could be many people. It's a role, but not necessarily a person. It could be persons. And then we have over here what we call the subrecipient management team, which is what sort of the responsibilities that primes have over their subs is what this course is all about. If you choose to become a prime with subs, it carries a lot of responsibilities, and I think you really need to be ready for that. And that's what the next few slides are. Are you ready to be a prime with subs? So let's just talk about these subs a little bit. The sub L would be deemed a large sub, which means they expend more than $750,000 in their fiscal year. They will be subject to the Yellow Book audit. We'll briefly talk about at the end. Okay, so they get their Yellow Book or generally accepted government auditing standards audit. We'll call that the USAID audit. Okay, then by definition, the small sub is an organization that spends less than $750,000 in their fiscal year. That's a small sub. They don't get audited. Okay, a site would be an example where FHI, CARE, IntraHealth, Save the Children, World Vision, they are headquartered in the States, but they have an operation in your country. Okay, that's more of a consideration when it comes to auditing, but the bottom line is, they will be audited up in the US as part of that. So they will not be audited per se in your country. I've seen you are from many, many countries here. I've seen 15, 20, 22 cross already, and welcome to all of you from all over the world. Okay, so we're pretty much going to be focusing on the large sub and the small sub and the responsibilities for the prime to manage them and make sure that they're audited, and so we all are successful. Okay, so let's go to, I think the great news, as we say, is ASAP, as Susan said, has a huge amount of resources that you can use to be competent, and training materials and advisors in many countries. And certainly, if you need more advice on this, reach out to Susan or the ASAP site. Okay, so my question is, are you ready? And ready for what? Ready? Well, to have a relationship with the US government. And I sort of define it as 4 different levels that you need to be aware of all these and the risks and responsibilities that come with them. Okay, so let's start with what I call, and we use a track as an analogy because it's just an easy way to do it. It could be any sport or anything, but let's just start with probably our lightest or least involved relationship with the US government. It could be a fixed amount award, or for us, probably more a fixed amount sub award. Now, what is this? It used to be called a FOG, a fixed obligation grant, but with the new uniform guidance, it's called a fixed amount award or sub award. And these has very unique characteristics that primes, if you're going to have a sub, first think about, do you want to give them a sub award or a fixed amount sub award? Here's the difference. Fixed amount sub award, limited to 3 years in existence, 3 years, but not limited to how many you can have. So you can have many 3-year fixed amount sub awards. They are designed that they are set up to deliver milestones. And the organization is paid based on delivery of milestones, almost like a contract. Okay, so if you are a prime and I'm going to need a monthly report on something, and you can say, okay, I don't need a sub award because that gets audited. Fixed amount awards and fixed amount sub awards do not get audited. Okay, so that's one of the beauties if you don't want the headache of audits. Doesn't matter if it's $1 million, it still doesn't get audited. Okay, so one thing, a fixed amount award from USAID to a fixed amount awardee, there is no limit on how big. A fixed amount sub award from a prime to a sub is limited to $250,000, called the simplified acquisition threshold. So think about this. One thing, the cost principles also do not apply to a fixed amount award or sub award. So pretty much an organization, you agree up front. If you want, we've got a folder with 4 different documents from USAID on the website, but you have to dig to get them. We'll send them to Susan, or you can send, at the end of this, we'll have an email address for you if you want. But the bottom line is, this is a good vehicle to use with when you need something that can be broken into milestones and deliverables. Okay, 3 years maximum. Cost principles don't apply, not audited, and certainly generally, it's pretty limited in your interaction with the US government. Okay, so that starts with the grade school kids. Next, we have the next level, I would say, is subrecipient, which many of you are. So here we show high school runners, and you see here they're pretty structured, and whether they started with a fixed amount subaward or not, doesn't matter. Many of you are subs. And so what is this about? Well, here you do not have a relationship with the US government, as I said before. So you're sort of shielded from the wrath of the government. If they demand things from the prime, you are, in some sense, that's a good thing, or in some sense, that could be a bad thing. You may want exposure to the US government, but generally you don't get it here as a sub. But if you spend more than $750,000 in your fiscal year, you will have the yellow book audit. Cost principles do apply to you, and pretty much the standard provisions for non-US NGOs apply to you as well. So certainly it's a very good way to learn how to be a US government partner without all of the exposure and potential risks. Next, we have, of course, the prime recipient, and this would be university level, where this is the real deal. You've got everything. You've got a relationship with the US government. You're totally at risk. You're probably going to be audited. You're probably, be over the 750 threshold annually. Okay, and everything applies to you. Cost principles, everything. Total risk, and for many people, this is the maximum sort of level they wish to get in relationship with the US government. But wait, there's more. Okay, you can of course be a prime with subs, and that's what this course is about. Okay, you don't get to this level from a fixed amount awardee. I don't recommend you get to this level as a subrecipient, okay? Because this comes with all of the risks, and that's what this course is about. Are you aware of what it takes to be a competent fixed amount award, a prime with subs, okay, of any type, prime with sub recipients or prime with fixed amount awardees? It comes with a lot of responsibilities. Okay, so as we say, well, what is the goal? I mean, of course, Usain Bolt there is going to be the winner of the race. But from my point of view, the three guys behind him are not losers. Okay, our goal, all of us, is to get the money, spend the money, pass your audit. Okay, for sub-recipients, pretty straightforward. Okay, prime recipients, more responsibility, but primes with subs, okay, you've got a lot that you're going to learn about here to make sure you're ready to do this. So these three guys behind, they're not losers. They just are going to finish tenths of a second behind. Okay, their goal, all of our goals, spend the money, pass your audit. Okay, so here is the structure of a cooperative agreement that you would know. Either it doesn't matter at the prime or sub level. We have our attachment A, which is known as the schedule, which I'll be showing in a little bit more description now. Okay, we have, of course, the program description of what you are doing, your scope and objectives, very descriptive. Attachment C is the standard provisions, where sometimes I will show you that I think in this document, it unfortunately does not provide enough information to you to be a good prime with the sub, or wearing my auditor hat, it doesn't allow me as an auditor to assess whether you've done what you had to do. Okay, so we certainly, when we work with agreement officers, we think it could be even better if they incorporate into your attachment A or schedule a little bit more information about being a prime with a sub. And of course, marking and branding, we're aware of that. So here is what is in the schedule of any award. We'll just say this is a large prime that we work with. And the bottom line here is you must make sure that at the prime or sub level, someone reads your award, okay, and make sure that they comply with all these requirements. And we certainly recommend that someone basically becomes a compliance person for your organization, because they are going to be making sure that you do everything that your auditor is going to be checking. So please have someone look at this. And again, if you are a prime with the subs, who's going to be overseeing that the subs do the same thing? They read their award, they comply, so the consortium as a whole is successful. Okay, so in your entire relationship with the US government, I would say this attachment A or schedule is the most important thing for, I would say, everyone on your project to read. You can say, well, I'm the technical guy. Yeah, but you're spending the money. You may have program income. You could be looking for cost share. You have to buy stuff. So which geographic code? So all of these things are important. But again, one person, she or he, should be the compliance person. Normally that would be maybe in an internal audit function if you have it, or someone who's part of your core team and not necessarily program related. That is going to be gone in 5 years. Okay, I see some questions coming in, which is fantastic. Okay, so now I'm just highlighting, okay, so here I'm showing you what the ECFR looks like, Electronic Code of Federal Regulations. And I'm probably going to jump into here in a few minutes. I have it set up to jump into. This is just a screen dump, because this is where the rules come from. And if you want to be a good anything, prime, sub, fixed amount awardee, or prime with a sub, you need to understand these rules and follow these rules. Okay, so I'm probably going to come back to here, but let's just see what kind of questions we have and how much time I have to actually jump in here. Okay, so very busy slide, but what we need to realize is those old, the boxes up top with all the red dots, the red X's, those are the old rules that no longer exist. Those were turned into the uniform guidance, which is the 2 CFR 2 Code of Federal Regulations 200. That's called the uniform guidance. People call it the super circular, omnicircular. It's just the UG, uniform guidance. Okay. Now this is, I call it the USAID version because USAID, state and defense, everyone uses the 2 CFR 200, but many of you could be CDC recipients as well, receiving PEPFAR funds or other funds from NIH or whatever. Just realize that CDC's version of their uniform guidance, they put theirs at the 45 CFR 75. It's essentially the same thing with some differences in the indirect cost area, in the de minimis space, and in certain parts of subrecipient management. Actually, it's different as well. But we're focusing on USAID right now, so let's leave that aside. Okay, so under that, what do I have that box saying? Non-US MSPs. What is that about? Okay, what we need to realize is every agency, when the uniform guidance came out, every agency was given 1 year. They were given 1 year to determine, are we going to take this 2 CFR 200 as is, or are we going to modify it? And USAID took the opportunity to modify it insofar as what happened is USAID said, look, this 2 CFR 200 is pretty heavy. It's going to apply to all the US guys, so the FHIs and DAIs and IntraHealth and everyone else. It applies to you in full. But for the non-US NGOs, they said, you know what? Let's create a light version. Let's take everything we want out of the 2 CFR 200 and put it into the non-US mandatory standard provisions. So I call that the light version. You know, you've got Diet Coke, you got Coke Light, Coke Zero, you've got Bud Light, you've got many types of light out there, light bread. You know, this is the light version of the uniform guidance. So it's important for all of us to realize you must read your award to know what rules apply. The rules that apply to the US-based organizations are not the rules that apply to the non-US-based organizations. There's a light version, and in some senses, in procurement, it's actually a little bit different. So you truly need to read your award, and especially read these provisions here that we're going to go through briefly. Okay, certainly for the US-based organizations, your FHIs, DAIs, you follow the 2 CFR 200. And you follow these US standard provisions, like how do we convert dollars to local currency and those things. Okay, but it's not a light version, it's just additional guidance. Okay, I see we got some questions loading up. Fantastic. So as I said, each of these agencies had differences so for us, we have USAID as our example here in the top left corner. So I'm going to briefly say, you're sometimes going to hear people throwing around, hang on, there's 2 CFR 300 and 700 and 600, okay? Realize that the differences that apply to each agency are put in. For USAID, it's 2 CFR 700. For the State Department, 2 CFR 600. For CDC or Health and Human Services, 2 CFR 300. Now that's beyond this course, but that is where there are some slight differences defined for you. Certainly it's not just for the hour and a half or 2 hours we have. Okay, so here is the standard provisions. Here's the rules you're going to have to follow for non-US NGOs. Again, we'll call this the light version. Okay, and it was, you'll notice there it was last updated. Well, it's been updated recently, and it is in your, well, put it this way, you can get this at the USAID website, www.usaid.gov. Just go in there, type in ADS 303, and you want for non-US organizations, you can see the version is MAB. That's for non-US. US is MAA. 303 MAB for you non-US organizations. Okay, now people say, hang on, Doug, but hang on, these rules apply. I've got the uniform guidance. No. Here is the very first provision for you non-US based organizations. Okay, so this doesn't apply to FHI Mozambique. It doesn't apply to DAI Uganda. This applies to non-US organizations. Okay, so what does it say here? November 2020, it updated. Okay, and it says the recipient will be reimbursed for costs incurred in carrying out the business of this award in accordance with the terms of the award. Right, the award. Read your award. It's in there, and of course the cost principles, which we're aware is the subpart E. That's it. Okay, Bob Strauss, who was a global leader and my mentor for 10 years or 15, 50 years of experience, explained it as he called it the four corners concept. Before we had digits, we had paper, and an award came with four corners, right? One staple and four corners. And the rule is for a rule to apply to you, it must be within the four corners of your agreement. So read your agreement. Have a compliance person, he or she reads your agreement. That's what you must comply with. Okay, now the beauty of, and again, a little bit beyond this course, but let me race through it. Here at M1B, here is where USAID enables you and encourages you. If you're not sure if any of your costs are going to be allowable or reasonable or allocable, you can ask your AO and get certainty. So what I'm saying is to primes, when you're putting your consortium together and you're not sure, your sub says, oh, I need money for this or this or this, ask. Don't have gray areas. When you're preparing your budget narrative, say, great, we need 3 vehicles. And then in your budget, we suggest you create an extra column and you put in there that from the cost principles point of view, is this cost specifically allowable? Or if not, then you add, we are seeking guidance as per M1B. That guidance is also allowed at 407 in the cost principle. Same thing, prior approvals. Don't have gray areas. Absolutely get black and white. And what we're going to see here throughout this course is that there's a lot of things we have to do, primes, that we're not aware of in terms of oversight of our subs. And those things cost money. Okay, does your subs get the 10% de minimis? We're going to see they should be getting the 10% de minimis. You're saying, oh, that's extra money. I wouldn't worry about the money. Under assistance, money is not the key thing, it's delivery. Under contracts, money is more important, but under assistance, between 80–90% of the points, if you will, have to do with can you do the job? So, right, that's your assessment of USAID is going to do the NUPES assessment of your ability of merit. It's called a merit review and a risk review. Okay, so with that, let's just see. I think we're going to have some questions coming up. Why don't we just stop for a quick second and see what questions we have before I jump into this? Susan, do you want to read the questions?
Not a problem. So first question is, the individual is wondering if you can discuss potential strategies for addressing risk assessments for small grants programs. So for example, they have many grants that they're giving that have a very small dollar value, 1,000 or less. And they're finding it really hard to do full risk assessments for all assistance subawards. Can we establish a threshold for small grants and do a pared down risk assessment? Is that something that is allowed?
Okay, great question. I would say certainly, why don't you ask your agreement officer this one? Because it doesn't make sense to spend $10,000 or even $1,000 doing an assessment of $1,000 subgrant. But I would suggest, wait a minute, why don't you consider, instead of making these subgrants, make them fixed amount subawards? Okay, again, the old FOG, but now it's called a fixed amount award. So a fixed amount subaward, that would make more sense. Chances are for $1,000, they're only going to be delivering something. And you can break that down into milestones and saying, okay, over the next year, we want you to deliver 4 quarterly reports, and we're going to pay you $250 per report. Done. Okay, not audited, and way less oversight. So that would be my suggestion, if it's possible. And again, where you find that, we'll send it to you, or it's in your ADS 303, subpart 3, subpart, it's either 15 or 25. But that's where you go find all these checklists for the fixed amount subawards. Okay, good question.
Next question is, a prime is trying to issue an FAA subaward to this individual's organization, which is significantly over the simplified acquisition threshold. They say it's fine. What are your thoughts?
No. Okay, so you again, good question. So basically the rule is USAID can issue a fixed amount award of any amount. I was working with the AO here before they left the post, and he was doing a $7 million fixed amount award. That's quite large. He goes, well, I can do it. So it can be. At the sub level, though, it's the simplified acquisition threshold, which is currently $250,000. But you can issue 20 of them. Okay, so there's no limit on how many you can issue. It's just each one is limited to 3 years $250,000. Next question.
Perfect. Next question is, what are those considerations that should be made to determine the type of award to provide a subawardee?
Well, normally when we put a consortium together, we say, great, we're going to be the prime and you're going to be the sub. And so we're going to do a risk assessment of you. What can you bring to the consortium? Maybe you bring a language skill. Maybe you've got the superstar, your chief of party, who's going to be deputy chief of party of the consortium. Maybe you've got memorandums of understanding with certain states, regions, or provinces, but whatever, you bring value to the consortium. Now, the prime has to put together the consortium and mix and match all these things to, of course, win the award. So there's many things to think about when, especially here we talk about risk assessments. And the big question I have, and I put it to the mission here in South Africa, is, we're going to see that a prime is meant to perform these pre-award surveys, but if they do that before the award and they don't win, who's going to pay for it? So it's almost like speed dating. I think you have to think about, hang on, I'm going to consider bringing you into the consortium. I don't have a lot of time and money that I'm going to spend to assess your risk. However, I do need to know enough about you that if you're strong, if you're weak, that I'm going to have to strengthen you, as we're going to see here in a few minutes. So I would just say, look at past performance. In many countries, again, if this is your very first agreement with the US government, you're a newbie, but otherwise, they may have worked for another NGO or they've had audits in the past, and we'll look at these items that are supposed to be in your risk review. So I think within a good 20-30 minute conversation, you can get a sense of, are they going to, from the prime's point of view, is this consortium, is this member going to be a good member for us, the prime? Great question. Anything else? Good. I see some others coming in.
Two pop in. Just give me half a second. So there's one actually in the chat. And the question is, does USAID dictate to the prime recipient the sub-recipient to work with? And if yes, what are the rules?
Yeah. Okay. Be careful there, right? I mean, as we are under the new administrator her very wise ability to go localization, with that comes certainly pressure on the missions to localize. And I have seen in many countries where I think missions are sort of pushing people who may have been subrecipients to become primes quickly. And I can't say the country, but you're on here. I've seen it come in. The mission's sort of suggesting, well, you can go from a sub to a prime with a sub. And I'm saying that's a bridge too far. That's subject to failure. So and again, USAID may say these guys are great. They were a fixed amount awardee and we'd like them to be involved because we like them and maybe they have great relationships. I'm just saying, be careful. Okay? You need to know, are these people capable? And if they're not, that's what you put into your consortium agreement. Dear USAID, and you're going to see this when we get further deep into here at D and E of our 8 examples or eight topics, that it's your job, primes, to fix and strengthen the subs if they're weak. But if you don't know that, you don't ask for the money. And it's awful hard later in the award, you get to year 1, you realize they don't have internal control systems, they don't have procurement. USAID says they're great, and now you realize that they're not great. Okay, so I think you have to go in with your eyes wide open and do some of the major reviews. We'll talk about these 6 domains that we talk about: HR, procurement, equipment, these sort of things that we'll talk about. Financial management systems, those are the items you definitely want to test, or at least understand before you bring them into your consortium. Next question, please.
Next question is, under an FAA, could you please differentiate between the pre-award assessment tool and the FAA eligibility tool?
Well, an eligibility tool is, that's where you want to go into the guidelines. So there's a lot of things about a fixed amount award that are a bit unique in that, it's not meant to be for buying equipment. It's supposed to be pretty clear what your deliverables are. And again, all this is done up front when either USAID gives a fixed amount awardee an amount. Because the cost principles don't apply, both of us, the government and the fixed amount awardee, or the prime and the sub awardee, they have to know how much should this cost to give us a monthly report? What it should cost to have a quarterly survey and to get a sense of it, because that's it. It's not audited. So I would say, the difference is a new POS or a new PIS, depending on how you pronounce it, pre-award survey goes into to independently assess the abilities of the organization who's going to get the money. It's not like a, what do we call them? It's not a self-assessment, an OCA. It's not an organizational assessment, which is done by yourself. You say, look how great we are. Okay, if I'm a prime, I don't want to hear them tell me how great they are. I want my guys to go in there and see more importantly, how strong or how weak are they? Because my risk as a prime is they're weak. Not that they're strong. I'm hoping they're strong. I worry that they're weak. Okay, I hope that answered that.
Perfect.
Next question, please.
Yes. Can a prime give a fixed amount award for a sub? I think you had answered this.
Yeah, no, absolutely. That is very common. A fixed amount sub award. Yes, and I'll show you. We'll talk about that, but yes, that is absolutely normal. Yeah, it limited to 250. Remember that, okay?
Next question is it right that the prime recipient is charging a withholding tax of, say, 5% from the amount awarded or advancing to its subrecipient for program implementation?
I don't know where the withholding tax would come from the amount awarding or advancing to its subs. No, I don't think so. Okay, that's a good question because you're not sure what it's going to take, but it was your job as a prime to determine the level of effort you're going to need to manage this up. And that's why it's so important you do your risk assessment. So remember, you're the prime, you've got your level of effort, what I'd call the subrecipient management team, competent people managing the subs. They've got their own money. So they've got their money for their program costs and their 10% de minimis and ODCs and everything else. I don't think you should be withholding a management fee effectively for managing that sub. Good question, but I think the answer is no.
Next question is, a non-US government entity is working in a fixed amount award with many subrecipients. Some cannot justify their expenditures well, as stipulated in the contracts. Can we ask them to reimburse the funds that are not properly justified?
Okay, so interesting question, but I don't think a fixed amount awardee is going to have sub-recipients under them. A fixed amount award or sub-award is very specific to identify deliverables and milestones and pay based on milestones. So I'm not sure, and then you go on to say, as well as is stipulated in the contracts, I think we need to get our wording right, but it's unlikely that I don't think it's going to be, you're going to have a sub fixed amount sub awards. Okay. Next question, or maybe clarify that again, but I think the answer to that is it's just not likely to happen. I don't think it can happen. Okay, good question. Thank you.
Next question is, does the prime have to share the 10%?
Sorry, Susan, I can't hear you.
Oh, sorry, you can't hear me?
Now I can, yeah.
Oh, okay, no worries. Does the prime have to share the 10% de minimis with subrecipients?
Well, in the guidance in COFAR, which means Council on Financial Assistance Reform, had a very clear 3 Q&As after uniform guidance came out. And I'll show you when we go into the uniform guidance now, it's expected for a prime to give the 10% de minimis to their sub. Yes. Now in the Q&A, which I'm happy to send all of you, but the whole point was one of the questions from the field somewhere in the world was, dear COFAR, dear basically OMB, my prime is not willing to give me my 10%. What should I do? And the answer from on high above USAID was, tell your prime they are subject to termination or suspension if they don't give you the 10% de minimis. Okay. So pretty much I think everyone's accepted. And if I'm a prime, I can't think of a good reason not to give it to the sub. They're going to need the money, especially if it's a new sub. If it's a new partner, they don't know the yellow book audit costs more than they think. They don't know they're going to have internal controls. They don't know there's going to be hidden costs of being a U.S. government partner. They don't know. And so if they don't have the 10% and they fail, it's your fault as the prime. You're held responsible. So, I see no good reason not to give the sub the 10% de minimis. Okay. Good question.
All right, next question is, the 2 CFR 200 doesn't have a clear answer to this question. Can a small subaward be made to an individual to implement a portion of the project on the ground? Or should this always be considered a consultancy type of contract?
Yeah, I don't think a subaward basically goes to a person. I think that's more, it probably is more of a consultancy type contract, like a consultancy contract that would be. Yes, and all of the, remember, all subawards need to be approved by USAID. So, when it gets to there, I think it's highly unlikely an individual is going to have a sub award. Much more likely to be a consulting contract, correct? Next question.
Next question. Is it right to allow a fixed amount awardee to procure equipment if budgeted for and assigned milestones?
Yeah, okay. So certainly fixed, good question. A fixed amount awards are not designed for that. Now it's possible. And we always say, if in doubt, ask your agreement officer. So I can't say it's not possible. All I'm saying that's not what it was designed for. It's about for defined activity. It's basically about activities. Okay. And so therefore you got to be very careful. And even with the fixed amount award or subaward, there are still, I think, 29 of these standard provisions that you have to comply with. So yeah, I think they are a useful, they're a useful mechanism, but that in the right situation. All I'm saying is learn what your program is going to do. Think about if a fixed amount subaward might be more relevant and easy to manage than a subaward. Great. I think that's it. Susan, is there questions? Over?
Yep, that's good for now.
Okay, so now what we try to cover is the concept of all the costs that we have to incur at the prime or sub level need to be reasonable, allocable, allowable, and supported. And so those of you who were on 2 weeks ago on our other course, and it's still available on the website, but the whole point is I went through these as well, but I think it's so important that we go over these one more time. So you saw earlier, you saw under M1, it said you will be reimbursed, non-US NGOs, for what's in your award and the cost principles. So these are from the cost principles: reasonable, allocable, allowable, supported. Let me just go back one. Right? As your auditor, this is what we audit. We audit that every one of your costs is reasonable in amount. We'll talk about allocable, allowable, and supported or documented. If it's not all of these, we will have to question the cost, which means it puts your cost into limbo, and the agreement officer is going to have to make a determination. Are they going to allow it or disallow it? Okay, you don't want any disallowances, so let's make sure we understand these four concepts. So reasonable. This is called the prudent person rule. Okay, the cost is reasonable if it does not exceed the amount which would be incurred by a prudent person. What's a prudent person? We are all prudent people, and the concept is that when we spend our own money, right, you're going to get paid in the next 6, 7, 8 days. That's your money. We're prudent with that. It's going to go to food, petrol, it's going to go to housing, it's going to go, rent or whatever, school fees. That's our money. We are careful. The US government says, be as careful with the US government money as you are with your own. That's deemed reasonable. Okay? And the next thing then is the other second most important point here is you have to be able to document why you made the decision at that time to incur the cost. Now, I'm sitting here with a hand sanitizer that before COVID may have been $1. And then when COVID hit, 3 weeks later, if you could find it, it was $5. Okay, now, of course, that's insane. We're getting ripped off. But the bottom line is most of us needed to have this to be able to go into the office. We needed our masks. We needed our thermometers, right? Mine ended up being like $37. It was $5 beforehand, right? But the bottom line is we needed it. So in that circumstance, $5 was reasonable. But now that again, they produce, oceans of this stuff, it's probably back down to $1.50. And now, is it reasonable now? Well, 5 isn't now 1.5 is. So the important point of when you're doing procurement and things is document why you thought a $5 hand sanitizer was prudent and was reasonable. Okay, it's your job to document it. Okay, the next in reasonable is the bottom line is, did you need to incur that cost for your project? So if you need a vehicle, you need a vehicle. Do you need a boat? No. If you're on Lake Malawi or in Tanzania, Uganda, Kenya, you're on the lake there, you need a boat. Madagascar, you need a boat. Okay, but you don't need a plane. Okay, and so the whole line, only buy for your project what you need, and you have to document that. And then let's just go on to the third bullet point, that the importance of competition. The US government is very, very interested in competition because correctly, they believe that the more you compete for items, then the better deal you may get. Of course, there's other issues in procurement that come up, but the bottom line is reasonable. They want to see you getting comparable prices. Okay, that's all we have time to go in here for this level of reasonable. Okay, then allocable. For most of you, the reason you don't recover all your costs is because you're not understanding allocability. This is the main reason. When we had the PEPFAR meeting down here a couple of years ago, just before COVID, and many of you came down, and some of you stood up in the big plenary session and said, I don't have enough money to cover all my costs. Well, the answer is you didn't understand what's allowable under allocability. So cost is allocable to a particular project. Most of your project would be deemed a cost objective in accordance with how much of your organizational costs went to that project. Okay, so let me just go to this one, which is, so this is 405. So 2 CFR 200, write this down, 405, and this is A1, 2, and 3. Okay, you probably get A1, you might get A2, you're missing A3. And I have to admit, in the provision, USAID doesn't make this crystal clear of what is allowable. So let's go through this. First of all, cost is allowable if treated consistently with other costs. I want to see consistency between your USAID project and your EU and your Gates and Global Fund, consistently how you allocate those costs, and then between years. Okay, last year, this year, how am I allocating my rent? How am I allocating my insurance and all that? I want to see consistency as an auditor. Next, the 3 types of things are costs incurred specifically for the award. Okay, again, Bob Strauss concept, but for this project, I would not have incurred this cost. Right, so I've got an OVC project, I got 1,000 orphans, I need 1,000 beds, 1,000 bed nets, 1,000 school packs if we got to send the kids to school, 1,000 lunches. Those are absolute direct costs. The only reason I'm buying bed nets is because I've got 1,000 kids. Those are easy. The second cost is you have rent that benefits both our project, and so we're on the ground floor and we got 1,000 orphans here. Okay, well, not 1,000. We have a project that manages orphans, and upstairs we've got the Gates Foundation. Okay, and our rent check comes in and it's $1,000. How do we allocate rent? Well, rent is based on a logical, reasonable proportion of space. Rent is based on space. Insurance is based on maybe assets insured. Security could be based on many things. HR, finance, procurement, IT, all of those overheads, if you will, can be allocated on a logical basis. And that's allowable. Frequently, those will be other direct costs if you don't have the NICRA. It's the third one you're not getting, okay? But the US government rule is if you must incur a cost to operate, to be in business, the US government will pick up its fair share of that. Okay, now that's not clear in M1 or M2 in the US government rules, at least USAID rules, but that's the rule. So, and where it's even more, so this would be things like, okay, well, how about, and CDC especially says, oh, we don't pay for your internal controls. We don't pay for a board. We don't pay for a lawyer. We don't pay for a statutory audit. No, you do pay for it. You just have to know how to ask for it. So in your proposal, you say, okay, that's when you put in your budget, you put in, great, this cost, I'm going to show you in a few more minutes. In the NUPIS, you need, the first domain we look at is the organization. Do you have controls? Are you proxily structured? How can the US government say, we're not going to give you a subaward or an award if you don't have these, and yet they don't pay for them? They will, you just have to know how to ask. So here, again, it's 405, and this is A1, 2, and 3, but more importantly, this third one, A3, is better defined at 405D, where it makes it very clear. Okay? Even if you don't have a logical justification for this, if you must incur it, the US government will pay. Okay, that's where you want to go. So I just suggest, normally when it's these type of things, I think as an auditor, I think it's reasonable if my USAID project is $5 million a year and my Gates Foundation is $1 million a year, that it would be a 5-to-1 ratio on those costs. Okay, important. That, again, don't get hammered into we don't pay for that, because if you have to incur it, then they should pay their fair share. I mean, don't go, your job is not to go into poverty by being a US government partner. Your job is to take the money and spend it correctly. Okay, that could generate some questions. The other thing is here, following right on from that, here's where the US government says, like, we'll pick up our fair share, but don't charge us for the Gates Foundation or Global Fund or EU projects overheads. We will pay our fair share, but not an unfair share. So just be careful there that you have a proper allocation methodology. Okay, we don't have time to talk about NICRAs and indirect costs in this course. It is in the previous ones, but the whole point is you should be preparing what's called a cost policy statement, where you sit down as a finance team and say, are we charging this cost as a direct cost or an indirect or ODC? Okay, orphan beds, direct. Okay, but I've got 30 projects out there and I've got to rent and I've got to split the rent. Well, that's going to have to be allocated, and the EU picks up its fair share and everyone gets their fair share. Okay, each project stands alone. You can't move costs between projects. Each project has a budget. Each project has an expenditure. Okay, so allowability comes last, even though numerically it was first. And the reason we cover this is because the first thing it says is for a cost to be allowable, first it has to be reasonable and allocable. So that's why we cover those first. Reasonable in amount, prudent person, allocable, properly allocated, then it's going to be potentially allowable. Okay, then we realize the cost principles. There are not foreign cost principles. There are the US government cost principles that apply to everyone. And since 99% of US government funds that it spends are spent in the US on state and local governments or NGOs or US activities, then basically we need to, when we read the cost principles, we need to realize that, what are they talking about? Exclusions and limitations and state and local government stuff. Well, that's what it is. Think about COVID. Some states demanded things and other states didn't. Those would be state and local government limitations that are necessarily in your award or possibly in the cost principles. Okay, this consistency, I don't want to go too deep into that, but again, consistent treatment. So the bottom line is from USAID's point of view, if it's good enough for your organization, it's good enough for the US government. So many of you, great, you're new, you're one or 2 years, you're NGO, you're pretty frugal, you're threadbare, you're saving money to do God's work. Great. And now you get a US government award and you say, oh my God, you realize that I can charge $250 for a hotel room and I get $87 for food. Yet when I'm traveling on my NGO money, I get $30 for the hotel and I get $10 for the food. Well, the whole point is if you allow your people to go operate at $30 and $10, then you have to have those same policies for the US government as well. So all we're saying is, we look for, be careful about trying to too quickly go from what I'll call a frugal environment or a prudent environment to where many organizations who've been working with US government for many years have pension plans, savings plans, medical plans, all kinds of benefits, fringe benefits. They're possible, but we are looking for consistency. And you can't say, well, the US government allows me to have a pension plan, but the EU project doesn't. Well, that's not consistent. Okay. Okay, and finally, I just want to go straight down here to G, which is documented. Part of allowability is documentation, documentation, documentation. We don't see it, we're going to question the cost, and I'll show you that in the CFA that's coming up soon. Okay, so we have our next opportunity to ask some questions or answer some questions. Susan, what do we have?
All right, we have 4 questions. So first one, I'm not entirely clear, so I'm just going to read it out and maybe you can figure it out. If subawards do not.
Okay, I can see it. I would say if a subaward do not maybe get a percentage of the prime NICRA, how much would they claim? Okay, so each organization has their own indirect situation. Okay, now there's very few African NGOs that have the NICRA, negotiated indirect cost rate agreement. There's a whole discussion about it takes a certain environment that the mission has to be advanced, the recipient's got to be advanced, the auditors have to be advanced, and the RIG plays a role as well. So I know here in Southern Africa, and I think all of you are on, Right to Care, Broad Reach, Mothers to Mothers have a NICRA. I think AMREF up in East Africa has a NICRA. Okay. Otherwise, there's not a lot of, and again, if you have a NICRA as a non-US organization, please let me know, put it in the chat. Okay, but the bottom line is that NICRA they have, and that stands alone from any subrecipient amount. The prime, if they have a NICRA, they get the NICRA. Even if Broad Reach or Right to Care, Mothers to Mothers is a sub, they still get the NICRA, and I'll show you this in a few more minutes. Okay, so if you've got the NICRA, you get the full amount, and the prime can't beat this organization down saying, oh, but you're so high. That's the way. It's like an in-law, right? If you marry the person, you get the in-law. They come with the organization. The NICRA comes with the partner if they're going to be part of your award. Next question.
Perfect. Next question is, what is the extent of disclosure expected from prime to the subaward in regards to the agreement with USAID?
Okay, I'll reread that because you broke up a bit. What is the extent of disclosure expected from prime to the subaward in regards to the agreement with USAID? Well, that's a fantastic question, and that's what you need to negotiate, primes and subs, because sometimes the primes don't want you to be aware. And you could be I mean, there's a whole discussion, there's a whole one-day course on capture management, actually a two-day course, but you have strong primes and weak primes. You have strong subs and weak subs. So it's like a dating game for you to put together a consortium that's going to win, but still remember the prime is going to have the ultimate responsibility. So if I were a sub, I would want some site of at least my percentage, and not that you can have a guarantee, but I go into this saying, okay, I'm responsible for a certain region or a state. And let's say the total award was going to be $10 million. Okay, and I'm a sub-awardee and I'm saying, okay, $10 million, but I'm pretty small, so I'm going to get maybe $500,000 a year. So I'm going to get what, 2.5 million in total, and the rest goes to the prime. And so that's sort of the agreement, written agreement. But then the project starts and USAID cuts the funding. And now the prime doesn't have to tell you how much it was funded, what happened, what the cut was. They may just try to say to you, well, okay, or USAID did away with your portion, or now you can only have $50,000 a year or something. Okay, that's the type of stuff you want to negotiate. How much understanding? Again, subs, you're not going to have a relationship with USAID, but I'd certainly expect to have certain guarantees that to be a member of the consortium, you have certain rights and certain knowledge of what's happening. Okay, you can't necessarily guarantee that you have power to what to do with the consortium, but I would like to see. I suggest you try to lock in certain written rights before you get into it. And again, if you are the go-to sub, then you should be seeing what other primes are willing to offer you. Okay, good question. Next.
All right. Next question is there guidance on whether risk assessments should be conducted only at the pre-award stage or regularly throughout the award duration? What factors should be considered?
Okay, well, that's a very good question. Certainly, I would say in theory, before you bring them into your consortium, but certainly is immediately if you get in, again, that's sort of follows up the question. If USAID says, oh, please take these guys, you're thinking, all right, what am I getting into? But do the assessment then. But I don't think you need to do it annually. The whole point is you're monitoring the sub. You're monitoring. We're going to see here under what is it, 332D. Your job, you must monitor them, and that monitoring could as we're going to see, could cause new requirements that you weren't aware of. But that's the last thing you want. You don't want to be surprised by weaknesses of your sub. So I will be covering that in a few more slides. Good. Next.
Next question. Is it correct to say that under the FAA, cost principle is only important during the review and negotiation of costs and before determining the milestones?
Okay, so first of all, the cost principles do not apply. If you go to cost principle number 401A, I think it's A number 3 or 4, it specifically says cost principles don't apply. But that's a very good question, because then what does? Well, again, that's where the prime and sub need to be aware of what it should take to have maybe some kind of survey where we go out and get 100 or 1,000 sort of feedbacks or whatever. That's the whole point. You need to be able to estimate the costs, and that's where the USAID guidance, I think, is fairly good on that. So again, either get it from the ASAP website or go into the USAID website, or send me an email. We'll send you the pack. But you definitely want to try to do a fair deal for the U.S. government on the costs. Good question.
The next question is about the 10% de minimis. Although the 10% was not to be audited, do we need to have supporting documents for the spending?
Okay, well, The answer would be no. Okay, but if I were in the mission, and to be honest, in the new, the most recent addition to where this comes from, which is 2 CFR 204-114 subpart F. Okay, they've added a new sentence. It says pretty much, it says if any organization that does not currently have a NICRA, and that's the difference between USAID and CDC. CDC says anyone who never had a NICRA, but now it's anyone that does not currently have a NICRA, for USAID at least, can elect to charge the 10% de minimis. It can elect to charge. The new sentence says no documentation is required to document the 10% de minimis. Now, as a taxpayer, American taxpayer, that leaves me a bit queasy. As an auditor, that leaves me a bit queasy. That's why you got to go to the next sentence, though, that does say you do need to be able to sort of prove that you're not double charging or inconsistently charging. So that's what I said. The cost policy statement would, for me, be some comfort that you can show to the mission that you're not going to double charge or inconsistently charge. But strictly speaking, no, you don't have to justify what you do with the 10% de minimis.
We do have one more question on the de minimis. Are there specific things the de minimis cannot be spent on, such as procuring a building?
Okay, so one thing about the de minimis is I think it's meant to be used for allowable costs. Okay, so it can't be used for alcohol, bad debts, certain types of advertising, entertainment. It is meant to be used for generally organizational activities. Okay, the CDC only allows the 8%, and that is a little bit different because they're not giving you the de minimis, they're giving you the 8% indirect costs, which I think will be audited. So the bottom line, I think, for USAID recipients is it is your money, but I would like to see, I would suggest that you should be able to justify, even though you don't have to. I mean, to me, it would be good governance to say to USAID, okay, and again, we don't have time here. This is not the indirect cost course, but if you go to look at a cost principle number 413, that's for direct costs. There it sort of explains what the US government expects that you would charge directly or indirectly. And things like your executive management, okay? I mean, your CEO or CFO, some of the leaders, if you've got 20 or 30 projects, there's no way you can legitimately allocate their costs as other directs, okay? That one, that's a bone I would throw the US government. Say, CEO, she or he, we're not going to do timesheets because if you charge costs directly, you have to do timesheets or allocate time. Say, great, not them or not their PAs or assistants. Okay. Also, what is an allowable cost, but only as an indirect, is bid and proposal costs. I think it's number 460. Okay. That to me, the main reason for the 10% de minimis was because small organizations don't want to calculate the NICRA, but they have no other way to recover bid and proposal costs. So that to me is your throwaway line. You say, I'm going to be doing a lot of bid and proposing. That's an allowable cost, and I can't charge it as a direct cost. That's what I'm going to use my 10% de minimis for. And then in theory, you don't have to justify it. I would still try to be able to justify it. Good question.
So we do have a few more questions on the de minimis. The next one is, can the de minimis rate be a lower percentage if proposed?
It can be, but the specific guidance was you better not be caught trying to beat the sub down, okay? Because you're not supposed to do it. It's 10% for a reason. And I mean, if it came down to, you got two subrecipients and the prime is sort of saying, well, we only have this amount of money, which shouldn't happen anyways, but in theory, a sub could discount, but that's not the intention. Okay, especially under assistance. Next question.
Next question is, the de minimis is used where there is no NICRA. What is the basis of determining the de minimis to be charged in the contract?
Okay, so it wouldn't be a contract, it'd be a cooperative agreement, but it is, there's no NICRA. The basis is you get 10% of what's called MTDC, modified total direct costs. And that is in the uniform guidance. It used to be 200.68 before they did away with the numbering, but go into 2 CFR 200. And then in the very first section, it has definitions or even in the mandatory standard provisions. Sorry, it's M5. Requires applicable number 5. It gives you the definition of MTDC. It's very clearly MTDC includes salaries, related compensation, basically activities of the organization, and only up to the first $25,000 of each sub-award. What is excluded is equipment, rental, participant support costs, a few other things, and everything over $25,000. So it's quite a not a nebulous, but a quite unclear. COFAR later went on to explain. He said, look, you're asking us too many questions about what's included or excluded. They say, look, just take total direct costs, exclude rental, equipment, capital items, again, participant support costs and other things. So that's where you should start. Start with the absolute detailed spreadsheet and take out those items which are mentioned. Good question. Next question.
Next question is, I understand that USAID and other US government agencies permit prime awardees to negotiate indirect rates directly with subrecipients.
Yeah.
Does this mean that even if the subrecipient does not have a NICRA, but has an audited indirect rate, that the prime can allow the subrecipient to use that audit indirect rate?
Okay, so you're mixing things a little bit, and the reference you referred to is, we will go there, but basically the prime has to determine if the sub, okay, so let's say you're a prime and you're going to have, again, right to care, mothers to mothers, AMREF, someone who has a NICRA, you have to give them that. What you're referring to is if they don't have a NICRA, you have the option to do what you've said. You can negotiate what I call a baby NICRA, where the prime and sub work together to go through effectively the same exercise as a NICRA, but that only applies in that one-to-one relationship. It doesn't apply. USAID doesn't recognize that NICRA, and other primes don't have to either. But that's a good exercise to do, I think, if you want to become familiar with how to calculate a NICRA or properly managing your subs. Yeah, so that's what it's going to say. It's going to say 332A4, 1, and then I and double I. That is, you either give what I just explained or you give the 10% amendment. And we're going to go there right now. So save that thought because we're going there just now. Okay, so those are fantastic questions. I need to move along a little bit here. So all I want, okay, the bottom line is, between, as I've said, relationships are incredibly important between USAID and the prime. Same thing with prime and a sub. You want good relationships. But this third bullet point sort of says it all, is it says USAID is, every agency, not just USAID, has certain limits on how demanding they can be on the prime. Okay, it's in the guidance. But there's no limit to how demanding a prime can be on the sub because they're responsible. And so if the sub blows up, the prime gets holding the bag. I guess if prime don't let the sub blow up, make sure they're competent and manage them correctly. But, and we call it tough love, that, frequently we do trainings for a prime and their new sub recipients and everyone's excited. And then the sub says, oh, I've got all this flexibility with the US government. The prime says, no, you can only move 10% between certain line items. And the guy says, that's not the federal rule. The federal rule is 10% of the total amount. And the prime says, look, we're the prime. We're going to put you on a short leash because we are at risk. And that's the rule. So get used to it. I mean, don't get into a sub relationship if you're going to be unhappy with your prime. Okay, so what rules apply to who? Here I just summarize one more time that USAID gives most of us have a non-US or a foreign prime. And so what rules apply to them? They get the award itself with Schedule A. They get the non-US standard provisions and the cost principles. And then the foreign prime is going to pass those same rules down to their subrecipient. So effectively, it's like for like. It becomes difficult, and I don't have time to talk about it, if a prime is a foreign prime and you've got FHI, IntraHealth Care, Save the Children under you, then you have to pass down to them their rule set, which is the full uniform guidance, okay? So I'm not saying, all I'm saying is you need to go in eyes wide open if your sub is going to be a US-based organization, because they have to operate with rules that don't apply to you. Okay, so just be careful there. I'm not saying don't do it, but just be aware that that comes with extra strings. Okay, I'm not going to go through this. So we have mandatory standard provisions and flow down provisions. The good thing about the standard provisions is it tells us what we must flow down to our subs. So they're all there. If you want to read them, but just go to the guidelines themselves and you will get that. Okay, so what I want to say is my biggest concern for USAID is that in the standard provisions, this is the guidance on the subaward, and it's not sufficient. Okay, subaward means great, carrying out the purpose of the award, fine. The only thing it says is great. You need to, primes must, or you're responsible for the subs, well, we know that. And you must make sure that they are able and capable, no guidance here. Okay, the second bullet point, check that they're not on the debarred or suspended list, which is now in sam.gov, fine. But other than that, where's the guidance? And wearing my auditor hat, where's my guidance? How do I hold the prime accountable? So absolutely, we go straight into the requirements for pass-through entities. So what I'm going to do here briefly, I've already queued this up for you, and I'm going to stop sharing and resharing. Let's just go here, and we're going to share screen, and I'm going to go into our uniform guidance. Okay, 1 second here. I'm going to go here, share screen. Okay, I've already pulled it up for you. So let's share here. Okay, let me know if this pops up. It should be titled to, okay, here is, I've already gone into www.ecfr.gov. Okay, and then I went in a few deeper. We want, basically, we want to get, this is what you want to bookmark when you get into ECFR, but we want to go into subpart D, post-federal award requirements. Okay, you go into there, and then I have this on the slides, but I don't have all of this. It's too voluminous. So I'm going to jump straight down to 332. So again, all of these apply to US-based organizations. And as I said, for non-US, USAID has pulled out from the uniform guidance and put into the standard provisions what you all your foreign guys have to follow. Okay, get down to 332. Okay, 331 is helping you decide, are they a subcontractor or subrecipient? We're not going to go there. We want to go straight to 332 here. Okay, requirements for pass-through entities. Notice what it says. All pass-through entities must. That's a big must. I told you about must, right? We auditors look for, did you comply with the musts? If not, you could have a finding. But A, it goes A, B, C, D, E, F, G, H. We're going to quickly get through all of those before this course is over. Okay, so A tells us, and this answers your question who was asking about the baby NICRA. So A says all pass-through entities must, and A1 says what you include in the award or subaward. This is what you primes must, so use this. It's pretty much going to be a carbon copy of your prime award, but they get quite specific here as well. Now notice down here under 14, you must include whether you are giving the sub and indirect cost rate, including the de minimis. Okay, that's got to be in your schedule effectively. Okay, so that's the first thing. And then next, I'm going to cover it here and not in the on the slide. Next, so we've had A1. 2, you got to make sure primes, you pass down everything to make sure the consortium as a whole is going to meet the requirements, compliance. That's easy peasy. 3 is you're going to do a risk assessment, right? You will under B below. And under B, it says if there's a risk assessment, C below is going to say if they're weak, you should impose special award conditions. And so that's what this 3 is saying. It's going to say if we do the risk assessment and we find out they're weak, then you put in these special award conditions, right? And most mini prime awards have this as well. When USAID or the OFM does the NUPIS or we do the NUPIS under the ASAP project, okay, we say these guys are weak. These should be special award conditions or there's going to be problem. Okay, now here's what you were asking for. Okay, 4. So 1, it says what you must include an approved federally recognized rate if it exists. Okay, so that's the first thing. Okay, and approved. So again, if mothers to mothers, right to care, AMREF, Broadreach, VITSoon it has a negotiated rate, then you basically has to give them that. Now here's what you were asking: if no rate exists, you must then determine the appropriate rate in collaboration with the sub. So here's what I was saying. Under A is where you can negotiate a rate between the prime and the sub. Okay, this isn't recognized by USAID, but it's a good starting point. So it could be 12, 15, 20%. Okay, but it's again, that's between the prime and the sub. It's not, and again, another prime doesn't have to give that same sub the same rate if they don't agree with it. But I think that's a good exercise to get competent. Or B, it's got to be either this, it's got to be either A or B, the 10% de minimis. Okay, so there you go. That's where it is. Okay, Now here, okay, I don't want to go farther. Okay, the pass-through entity must not require a de minimis indirect rate if the sub has a NICRA. That's what you're saying. Okay, can I beat them down? No. If they've got the NICRA, they get the NICRA, like the in-law. It comes with the relationship. Okay, while I'm here, I'm just going to go through some of these because you can see it at the horse's mouth. Okay, primes, you must make sure that the sub allows you access to their records. Okay, now I don't want to say US organizations are a bit tough with this, but many times the large organizations used to be the prime, and certainly you didn't have access to their records, and now you're bringing them as a sub, and they say, well, you can't really see our records because we're audited in the States. Not the rule. Prime, you must allow access, you must demand access to the sub's records, because if I'm your auditor, I want to see them. I'm not going to re-audit it. Okay, so all the big guys, again, the FHIs and CARE, PACT, PATH, IntraHealth, the DAIs, they all are audited in the States. And so, yes, as an auditor, I can rely on their audit, but I still have to make sure you, the prime, did your job at making sure that the costs they're passing up to you are valid. So I may want to say, I need to see a timesheet. I need to see a procurement record. I need to see a leave form. So you have to make sure that, that your auditor and you have access to those records. Okay. And so then B, while I'm here, I'm just going to say, here is where you, prime, has to evaluate the risks of the sub. That's what we call the NUPES or pre-award survey. Okay, you examine their previous experience with similar awards. How have they done in the past? Look at, have they had audits? Okay, have they had audits? Get the audits. Ask to see that you've got full rights to demand audits. In theory, you could get them to FOIA them in the States. You have to be a US citizen or organization to FOIA, Freedom of Information Act. But if I'm a sub and I want to be in your consortium, I'm going to show you my previous audits, or ask other primes. Okay, the important point here is great. Maybe these guys were subrecipients and they had $200,000 subaward. And now you're going to give them $2 million. Do they have the horses? Do they have the people? Do they have the systems to handle your new money? That's what you got to assess as well. Okay, so we're going to look at these 6 domains if I have time here at the NUPES stage, when I take you through that. Okay, and then so that was D. C, as we said, consider imposing conditions in the award if they're weak. And then D is monitoring, and I want to go back to the slides for this. Okay, so let's just give me a second here. And let's unshare and reshare. Stop. I could expect some questions queuing up right now. So certainly every time is a good time to ask questions. So, so here is where I started again, but I'm now back in my slide pack. And I do, because I do need to get through them. And so we already said this. All pass-through entities must, make sure that everything that you need in the subaward is there. So that is, sorry, let me just go here. Yeah, go back one. A1, that was federal award identification. They talked about the de minimis and so forth. As we've already covered, 2, 3, and 4 was that question you asked. And so there, I've already covered this, okay, very clearly. And 5, make sure you have access to the sub's records. And 6, make sure you have closeout conditions. That's quite interesting. I just did USAID asked me to do a closeout hour webinar, which we did on the 9th, and you were all invited. It was on the 16th. But the bottom line is there's not very much guidance on closeout. And what really means, we don't have time to talk about it now, but closing out up until the end of the project period, pretty straightforward. You've got that 4-month period between the end of the project activity and when you must submit your final voucher. That's a total gray area. And my only advice there is you get absolute certainty of what costs you're going to incur in that period and get them prior approved from the agreement officer. Okay, here, evaluate the sub's risk. Talked about that, what you look at. We'll talk about it in real examples. Okay, I'm going to carry on here because I think we've addressed that. Okay, here is where, you were asking, I think one of you asked, this comes out of the ADS Automated Directive System Series. As I said, ADS 303 subsection 3, and then I think it starts at 15, but it goes up to 20 something. Here's where it says you've got to conduct the risk assessment. It's a must, mandatory. My question is, when do we do it? Okay, and that's who's going to pay for it. So I would certainly say And again, maybe you're a project that is already has many multiple awards with USAID. Maybe you could squeeze it in under your NICRA or 10% de minimis. But the bottom line is I would get confirmation who's going to pay for that risk assessment. Okay. Okay, they can't be excluded in SAM.gov. So that is meaning they're not on the excluded parties list, or they're not on the terrorist financing list, or now the third one, the United Nations list. Okay, new subawards are not required to be registered in SAM. Primes must be. As of April 4th, the DUNS number disappears, and it's only going to be a unique identifier. Okay, DUNS disappears on April 5th, probably. It's out of business on the 4th. Okay. Okay, so we talked about, okay, I just talked about this. They can't be on these bad lists. Let's not go through that anymore. Okay, so here's your pre-award assessment. And basically, okay, this is what your ASAP project can share with you. But I think many of the organizations on here have participated in the preparation of what we call the NUPIS Plus, which adds extra domains. Okay, but certainly you need to make sure that what you're assessing is, can the subrecipient comply with our non-US government organization requirements? Okay, an FHI shouldn't be saying you've got to be as good as us, because they don't have to be as good as you. You'd like them to be, and it'd be good if they were, but they don't have to be. They have to be able to meet the threshold of the non-US standard provisions. So here's just some of the areas. If we had more time, we would talk about this, but these are what you're called your NUPIS domains. And as I said, the very first thing that USAID will check about the prime, or a prime can check about a sub, is do you have a proper organization structure? Are you legally constituted in your country? Do you have governance? Do you have a control environment? So if that's the first thing the US government asks, how can they turn around and say we're not going to pay for internal control strengthening when it's a must-have in the first place? Again, you just have to know to ask and have to know how to ask. 405D is what your 405D is your answer. Okay, so remember, primes, who are you putting together to ask these questions? Okay, so again, you can't just be the one guy who's available. It's got to be probably a team of people. When USAID does this, it's people from OFM, people from program, and someone from the OAA. It's a team that goes and does this assessment, because you need a monitoring and evaluation person. We're going to see. Okay, so legal and governance, no brainer. Next, finance, absolutely. And look what they ask for in terms of finance. They want to know, do they have internal controls? Okay, do they have adequate records? Do they understand what's allowable and not allowable? Okay, so again, they have to be ready to handle money. And primes, you're responsible. If they blow up, you're holding the bag. Don't let that happen. Procurement, hugely important. Okay, procurement is probably the second most question cost improper procurement activities. So you need to see, do they have procedures? Do they have written policies and procedures? If they don't, you're going to have to help them strengthen them. Where's the money going to come from? Okay, if they don't have adequate financial systems, they're going to have to be strengthened. Where's the money going to come from? It's coming from you. You're going to see a little bit further that you are responsible and you have to pay for some of these things out of your money. Make sure your budget has this, or make sure the sub has a 10% de minimis. Maybe they can pay for some of this as well. Sorry, I'm speaking fast, but I do want to try to get through this. Okay, conflicts of interest, hugely important these days. I'm just highlighting that last bullet point. Conflicts of interest are becoming more and more a problem, and too many organizations don't have an adequate internal control systems for conflict of interest. Next, equipment. It's a subcategory of procurement, but we need to know what are our policies, our thresholds, what thresholds do the subs have for equipment versus the prime? Of course, everything over 5,000 is equipment, but many organizations set lower thresholds. In South Africa here and across most of Africa, organizations set $500 to $1,000 as their equipment threshold. So then you need to make sure we're keeping track of our assets through our asset registers and things adequately. Okay, next we are going to do monitoring and reporting. So you can't send the finance guy in to see, how do we measure performance? Okay, that certainly is going to be, you need someone who probably your M&E type person or your performance management person. And I think we have one more, I think HR, okay? So policies and procedures, how do we hire people? How do we train them? How do we pay them? How do we evaluate them? What's in our contracts? What is our not just our reasonable salaries, but how about our fringe benefits? Incredibly important that you have an expert in your country who understands U.S. government rules and the local country rules. You can't just go from South Africa and set up in Malawi and think you're going to bring our South African rules to Malawi. Doesn't work that way. Get an expert in the local country. Okay, and then again, sometimes organizational sustainability comes in. So again, we need to know, are they going to be capable of finding cost share? Are they going to be able to find different donors and things like that? So again, these are all just areas that could take time. Okay, so we've covered this. You did the risk assessment. You considered imposing special award conditions. As we saw, we've done that. Now we get into D. Remember, all pass-through entities must monitor the activities of the sub, as you can read this yourself, but you got to make sure it's your job, primes, to monitor the subs to make sure they're achieving their goals. Now, what does it say? Pass-through entities monitoring must include, down here at the bottom here, so you have to monitor them, and your monitoring must include both financial and performance measurements. So you need your finance guys, your subrecipient management team could be composed of your finance team and M&E team or a performance team, okay? And then you need to follow up to make sure that the sub took actions on any weaknesses that you, the prime, find or that the auditors find. Remember, we auditors, if your sub's over 750, we're going to audit and we're going to make recommendations, and your job, realize that USAID does not review subrecipient audits. They rely on you, the prime, to read the audits and act on it. So you have to decide, you have to stand in the shoes of the agreement officer and make determinations on what to do about the sub's findings. Get stronger, fix this, fix that. Then 3 is where the rubber hits the road. If there's weaknesses or findings that have questioned or ineligible costs, you, the prime, have to make the decision, sub, am I going to allow these costs or disallow the costs? And primes, you are not allowed to bless ineligible costs at the sub level. $1,000 Christmas party, you can't bless that and say it was a great party, we loved it. You've passed that cost on to USAID, the sub auditors found it, it's ineligible on their books, it's probably going to be ineligible on your books. So we'll talk about that a few slides down. Okay, so that's your job to issue a management decision. And to me, that's a huge conflict effectively, because if you disallow it, you're going to get stuck with it. So just be careful who you bring into your consortium. Okay, a few more. Okay, I don't want to talk about this, but this has to do when there's multiple donors, and the bottom line is it's called the cognizant agency rule. And the bottom line is if there's multiple organizations funding the organization, multiple primes, it's the prime that has the most funding of the organization makes the decision on what are called cost-cutting findings. So there's an internal control weakness. Every prime doesn't say, what are we going to do? The prime who's given the most money is cognizant. They make the decision. Okay. And that's where, again, from a CDC point of view, it gets very sticky because they want to make all the decisions, even if they're not cognizant. Okay, so here's some examples. USAID gives the prime 10 million. Great. They're going to have an audit. Prime gives 750 to a local sub or more, and they need an audit. Okay, so next, what do we have? We have the prime. That same prime gives another local sub 500,000. It's under the threshold. They don't need an audit. However, unbeknownst to prime B gives them the same sub 300,000. They're over the threshold. They need the audit. Now, prime A doesn't know it. Prime B doesn't know it because you may not have done your job. Your job, primes, is to know who else is giving money to your subs. Okay, that's your job because you're going to have to make sure that they get audited if they're not already. So again, and frequently subs don't know where the money comes. Oh, PEPFAR. PEPFAR is not a source. PEPFAR is a program. PEPFAR is it's defense, state, aid, Peace Corps, Health and Human Services. You've got to know who's giving money. CARE, Save the Children. Most of their funding in the States comes from non-U.S. government sources. So someone says CARE is giving me money. Great. Is that U.S. government CARE money or is it CARE's own money? Right? If it's U.S. government money, then basically that gets added to the pot. Okay, I would normally, I would add CDC here, but we don't have time for it, but that really complicates things. Okay, so primes, this is your responsibility to know who else is auditing or is funding your subs. Okay, I see a couple questions. So Susan, probably a good time to ask them.
Sounds good. So first question is a consortium member also a subrecipient? What is the relationship between a consortium member and the prime recipient?
Okay, so a consortium normally has a prime and other partners who are the subs. So the US government only wants to deal with one person who would be dealt the prime. So that organization is going to consolidate all the other organizations, expenses and things like that and submit it up to USAID. So they could be equal or whatever, but the bottom line is USAID wants to deal with one organization as the primary or prime organization. Good question.
Next question is, you mentioned closeout costs. Did you say it's okay to have expenditures after the end of the period of performance? For example, writing the final report.
Yeah, absolutely. How else can you, there are so many things that are absolutely required after the fact. Audit's required. You can't have an audit before the end of the project. So that's the gray area. So that's where you have to, that in our closeout, where do we have that? What do we got? Oh, we had a closeout webinar, and that's where we go over that. I think 6 months before your deadline. Let's say you're closing out on December 31st. Okay. So we say by July 1st, you need a 6-month program of exactly what's going to happen. When do we stop doing program? When do we close out the subs? When do we move the office? When do we get everything? Because by December 31st, you're done. But you're not done with the reporting. That's going to take place after that. How can you do your M&E reports and closeout reports? So those costs, that's what I'm saying. You need to, before December 31st, I'm saying by June, July, you want to identify to your AO, dear AO, we are required, even it's going to be in your award to have a closeout meeting, handover meetings, all this stuff. And that is an activity that's not program related specifically anymore. You're not saving lives. You're not managing the orphans. You may have passed that on, but you're still going to have closeout costs. Your audit is your classic example. So you identify those with your AO and say, how do we treat these? Do we move money aside? Do we obligate? Do we obligate them and say, okay, I've got a closeout fund here that I'm charging my CFA or FAS now for activities that are going to be over the next 4 months. Realize CDC only allows 3 months, but USAID and every other agency is 4 months now. Okay, absolutely. Who's going to pay for them? Now, it's a huge, I don't have time to talk about it, but if you're closing down your whole organization, that's very different from an FHI or DAI or Right to Care, who's going to have mini projects going, or if it's Health Consortium or broad reach, right? You're going to still have your core function. You're just closing out one project. So it's much easier to close out when you're just killing one project. If you're closing the whole organization, you've got a lot of things to think about. All your people, all your assets, all that kind of stuff. Okay, I'll leave it at that because that's the closeout webinar. Okay, next question, final question for now.
All right, this one's a little bit of a long one. We're in the process of revising our subaward policy as a prime. We're considering changing our policy for subs under 10,000K to do a limited pre-award assessment. The NUPIS is large and extensive and time consuming and seems to not make sense for small subawards as the amount of time it takes. Generally, these small subawards are too small, are small entities where they would always be high risk. They have limited US government experience and no audits. So could we do a limited assessment for these and just require an FAA in these instances as part of our policy?
Okay, yeah, great question. So again, a fixed amount award might be the better way to do it. And then you're not really putting yourself at much risk as long as you can agree on what the milestones are. So to me, that would be first prize. But again, agreement officers aren't unreasonable. Again, to give a $10,000 award to an organization and spend $10,000 doing the assessment just doesn't make sense. So I would think you could assess the risk. What is the risk of this $10,000 award going to be? I mean, that's not a lot of money to go missing anyway. So yeah, I think I can't say I can point to a specific rule, but I would say agreement officer would probably agree with you. Yes, go get some sense on what the risks are for these. We work with some organizations in Eastern Europe where they're doing a lot of democracy and governance, and they have these small awards. And I know they do talk to their agreement officer to say, how much are we supposed to do here? Okay, a lot of democracy and governance, but you're only going to give them limited funds. So I think limited review would make sense. Talk to the AO. Thank you.
Perfect. And that's our last question for today.
Okay, super. Okay, I'm going to try to finish this. How much time do we have, Susan? We have a half hour or what?
We have 25 minutes.
How many?
25.
Okay, 25 minutes. Here we go. Strap in. Okay, so I did mention, okay, so audit costs, realize that primes, you have your own audits. Subs have their own audits. So you must make sure that the sub has adequate audit fees in their award. People new to the US government frequently don't realize that their US government or yellow book audit is going to be more expensive than their statutory audit. How much? We just had 100 auditors on a course recently because we accredit the auditors. And I think the average estimate was between 20 and 40%, 25 to 40% that your USAID audit is going to cost. If they've never had a USAID audit, they won't know this. So you, I think, primes need to help the sub. I would be going through their budget and doing almost like a cost realism, like when USAID does a contract to say, hang on, you're only putting in $5,000 for a yellow book audit. It'll never happen. Maybe in Thailand, nowhere in Africa are you going to get an audit for $5,000. One Big Four firm, unnamed, will not do a yellow book audit for less than $15,000 because of all the risks we take and all the things we have to do. Okay, so assume your yellow book audit is going to be around there, okay, or more. But the bottom line here, I'm highlighting here that says you prime your audit cost for where do you go here? What am I trying to get here? I think it's something. Okay, no, sorry, it's the third bullet point. That certain costs for agreed upon procedures to manage your subs are going to be allowable. Okay, and I think I carry on and say that in this one. I think I may do that later, but that's the whole point. Primes, let's go there. Certain costs for managing your subs are going to be allowable to you. My question is, do you know what those costs are? I think you need to learn those quickly. Okay, so again, so D was you need to do that assessment, and then E, depending on the prime's assessment of the risks posed by the sub, as per your paragraph B, which was a risk assessment, the following tools can be useful for the prime to ensure this accountability and compliance. One, provide subs with training and technical assistance. Great, good. Who's going to pay for it? You are. Okay, make sure it's in your budget. Two, perform on-site reviews, well, program operations, so that again, your M&E people helping out there. Or three, arrange for these agreed upon procedures that I just showed you on the last slide. Okay, the bottom line is, let's see if I go here. Okay, so the bottom line here is that 425E says three things. One, those costs will be allowable if, one, it is conducted in accordance with GAGIS procedures, which means you should be selecting auditors from that country's approved audit list. Each mission has a new approved audit list. That will be very important to understand who it is. Two, you have to pay for it. And three, it's limited in scope to a pretty wide scope, but it certainly does not include audit. So it's cost principles, training and strengthening, internal controls, compliance. I mean, you can drive a truck through that opening about what you can use the money for, but it can't be an audit. Okay, so that's your job. So let's sort of close out this now. Okay, and so as we just say here, that you need to possibly could think, okay, they're weak. We need to have a capacity building plan, and I need to fund it. Okay, so again, all this potentially is what you're doing before you even propose for the award. Because if you wait too long, if you wait until you already get the award, you might not have enough funds. You didn't know how weak they were. So it's a catch-22. You're supposed to put in a technical, a comprehensive proposal, responsive proposal, and assessing the risks of your subs. Yet, you know, when do you have time to actually do it, and who's going to pay for that risk assessment? Okay, so primes, your job, as we said, manage the subs, start early, Okay, at the beginning is when things go wrong. It's like you get a dog off a leash, awful hard to get on, right? Keep him on a short leash, keep a horse on a tight rein until you know that you can manage him. And I say, guys, be sure you're aware whose job is what. Okay, and I certainly, we've seen where a large prime will get all their subs together and you say, guys, here's the rules, follow the rules. Okay, we call it tough love. And primes sometimes whine. They say, you're so hard on us, not because they want to be hard, because they want you to be compliant. Okay, then F, we're almost done here. You need to verify that as I showed you before, when those red boxes, those red audited, you prime, you must verify that every sub is audited as is required. Okay, so you need to know, are they going to breach the threshold? Not just with the money you're giving them, with the money anyone else may be giving them. So certainly ask them. And I think that you should make that a requirement of the subaward to say, okay, we're your prime. We need to make sure you're audited correctly. Even though we're not giving you above the threshold, you have to let us know if who your other partners are, who might give you US government money. They may not want to do this. They may want to say, well, I'm going to get from you, and I'm also going to be a sub over here, and you're not going to know about it. I'm sort of hedging my bets. Well, they're hedging their risk, or they're posing you risk. So you need to know who is you. I put that in the subaward. We need to know who your other primes are, if you have primes. Okay, then G is considering whether that's what the sub did, whether they're, as I said, they had the $1,000 Christmas party. And let me just see if I've actually got a new here. Okay, here's an example of what we used to call the Fund Accountability Statement. Now it's called a SEFA, Schedule of Expenditure of Federal Award. And you primes are, every organization is responsible now for their own SEFA or Fund Accountability Statement. We auditors are no longer, under the US government rules, able to help you prepare it. So frequently, even for large primes, they don't get it right. Okay, and we're all saying, can you help us? Can you help us? We're not supposed to. Okay, we can't do it for you. We'll nudge you in the right direction. But if you've got an organization that is a subrecipient, you need to make sure that they know they have to prepare their FAS or SEFA. So it's basically a budget and an actual. Okay, so what is my budget revenues, my actual revenues, my budget, my actual expenditures, my actual revenues and expenditures. So here's the example. Here we have assume this is a subrecipient. I know it's quite small, but let's just say we have ineligible costs here. What do we have here? $795. Okay, sorry, that's unsupported, $795. We auditors question your expenditures at either the prime or the sub level. So let's say you're the prime, okay, and now your subrecipient has question costs of unsupported of this amount. So that's where you have to decide whether you're going to allow it or not. But this ineligible cost, that you're stuck with. Okay, you are not allowed to say, oh, it's okay, that was a good party, or the entertainment was okay, or the bad debt, we're going to allow it. You don't have that authority. Okay, the prime auditors need to put into this, the primes auditors need to put into the prime report what happened at the sub level. And so that's what this G is about. You're going to have to adjust your records, prime. Okay, if the sub passed up to you ineligible costs that you didn't catch, you charge it to USAID, and now at the end of the year, your sub auditors say bad costs. That's what this G is. Okay, so I'm going to go over here. That's what this one here is. Okay, it is, you have to consider whether the sub's audits are going to necessitate an adjustment, and it will. Okay, so next we have H, and this is basically, look, things aren't working out, and now the sub just isn't willing to play ball. They're not willing to have a proper audit. They're not listening to us. They're not delivering, maybe. And we have to consider whether we continue to want them to be part of our consortium. And the bottom line is, we don't have a lot of time to talk about fraud, but possibly there could be fraud involved. And so the question is, well, do you still want them as part of your consortium? And, I was a chair of a large NGO for many years, and we had a sub that had fraud. We were worried as the board, what to do. Is USAID going to fire us and terminate us? And so we said to USAID, really sorry, this one got away with us. And we said, they said, what are you going to do? And we said, well, we're going to terminate them. Is that okay? Can we do that? And they said, absolutely. I mean, USAID actually, I think that sort of the note comes down that, every now and then they certainly need examples of where organizations have been terminated or suspended. And in this case, where we as a prime hurt, no. Obviously it was a bit of a wake-up call. We needed stronger controls over our subs, but the bottom line is take action. Again, but remember, the money you are still responsible for. Okay, so I think, guys, I've talked about the CFA here. And okay, so I'm ready for any questions and answers. Susan, do we have any comments or questions? So before I stop, I want to say again, I see we've got a few more minutes and I'll stay on till the bitter end. But again, I want to thank USAID for making this available. And I want to thank ASAP and Susan and Fikri and the whole ASAP team for always being here, enabling us to put this on and to manage our questions and the technical side of all of this. So Susan, thanks to you guys. If anyone here's our contact details. If you need, obviously, anything we've said, if ASAP or USAID can't provide it, we're here for you. And also we have, this is the baby course, of course. We've got a full-blown course starting on May 5th and 6th that goes into much greater detail of all of this. So if you're interested, let me know. But again, ASAP tends to cover many of these things anyways in their webinars. So with that, Susan, I turn over to you. If there's any final questions. And also, I just want to say again, thank you to USAID for, as I said, thank you all, your fantastic questions. I appreciate everything. Susan, what else do we have? Anything?
We don't have any more questions. Unless anyone would like to raise their hand and ask a question, we could unmute you if you'd like to ask Doug directly. So I'll leave it open for a minute and see if.
Okay.
We do have a couple of questions coming in now, I think. So, so they're wondering if you could elaborate a little bit more on the question about consortium partners. So I believe the question before was whether there was sub-recipient and how they're sort of integrated.
Yeah, okay, good question. So and again, thank you. So ASAP has put up the feedback. There are a number of questions. Was there 5 questions, Susan? I just want to make sure people realize if for any reason it didn't pop up. And Susan, we found frequently when, in our Zoom things, if someone's got an old browser or something, the webinar didn't pop up. So just if for any reason you're not looking at a poll in front of you, just please put your hand up for Susan to know that, and the whole ASAP team to know that, they're not going to get a response from you. Okay. And again, I thank all of you for your honest feedback. So, okay. So a consortium, of course, is generally going to have many people, but many organizations, but someone has to take the lead role. Now that might not even be the major contributor, if you will, so sorry, in the push, you're giving me time here to answer questions, which is great. But in the push for localization, okay, what we have to realize is the USAID threshold for a local organization is 50% of the project must be done by the local prime or all local organizations together. So if it's a Ugandan, and again, it could be a set aside. And so I hope all of you are aware on the USAID website, there's something called the forecast, the business forecast, where every quarter USAID puts out a mega spreadsheet of all the projects they expect to be coming in over the next year and a half. Okay, so many of the projects that you're going for are probably already there. Frequently, they do have a column that says, are we going to have a set aside for local organizations? Okay. So in that situation, you might actually have a local prime, and then you might have the big guys, the FHIs, the CARE, Save the Children, IntraHealth under you. Okay, but those organizations together are not going to have more than 50%. Okay, under PEPFAR, I think that threshold is 80%, I think. PEPFAR programs that are local are meant to be 80%. That's pushing localization down. Okay, but the bottom line is someone is the designated prime that is going to manage all the other partners' activities. We call them subs, but the bottom line is they are still going to be partners. Okay, but someone's going to consolidate their payment requests. Someone is going to be giving the payments to the subs. USAID is not going to give money directly to a sub. It gives it to the prime to give to the sub. Okay, great question. Anyone else, please? We have another at least 5-10 minutes, or I'm here till midnight, as I say. Every question's a great question. And my job is to help you get bulletproof. Okay, that's what we do. We make you bulletproof by learning the rules, playing by the rules, getting audited correctly. While I have time, literally earlier today, we were discussing audits. We have 50 people on a special webinar for FPD. And what's very clear, everyone, is you need to make sure that you pick a good auditor. Okay, now USAID has created all these new lists, and many of them have auditors. And again, you're not picking an audit, you're picking an audit firm. But the bottom line is a firm doesn't do the audit, the people do the audit. So when we have time to talk about that, you will want to make sure, and let me just see, maybe even go here, just 1 second, please. I might even have the slide up that I want. Let me just see here. No, okay, you're screen sharing, that's fine. Okay, but the bottom line is, select a audit manager and senior who have been there, done there, got the t-shirt. Doesn't matter if you pick the best Big Four firm in the world, the firm doesn't do the audit. The manager and senior do the audit. So I would want to interview them to see if your chemistry is right. Can you get along with them? Can they get along with you? We had a situation, I won't say the country or even the continent. We had a client we were helping. They had an audit where the auditors totally screwed up. Totally non-gaggis, turnover of the manager and staff, didn't ask the right questions, tried to hide findings from the recipient, didn't even include all the findings in the draft report, ended up questioning over $3 million. Okay, we got asked to come in and basically redo the audit or assist them. They were gonna, and we determined, we said, look, we're gonna tell you the truth. And we said, you're subject to $223,000 of questioning costs. If we were your auditors, that's what the US government should demand that payback from you. But ultimately, the mission didn't agree. They stuck with the auditors, the rig weighed in. At the end of the day, that organization paid back over $1 million that they shouldn't have had to pay back. They overpaid $800,000 just because they mismanaged the audit. They had again, the audit firm was okay. It was the manager and the senior, the partner was never there. So truly, just be very careful when you're selecting your auditor. USAID gives you, in Southern Africa has the guidelines for how to conduct an audit, but that's ADS 591, it's called MAA. It's in I'd say it's in your digital pack, but if you go on the USAID website or ask your controller or ask anyone, ask your agreement officer, for the ADS 591, that's the guidelines for foreign audits, okay? And then make sure you select the right auditor. Make sure those auditors know the rules, make sure they're competent, okay? I'm not saying don't hire an auditor that's never done a Yellow Book audit because it's unfair. There's many new audit firms who are on the list. All I'm saying is the one thing you want to do is if you have a brand new auditor, you want a confirmation in writing from the audit partner that they will keep the manager and senior on the project for the entire length of it. Okay, you don't want bait and switch. You don't want to say, oh, look, I've got this lady, she's done 20 of these audits and she does the entrance conference and disappears. And next you get you get the B team. Okay, you want the A team throughout the audit. Okay, that's just my suggestion on there. That's how you get bulletproof. You learn the rules, play by the rules, hire a good auditor, hold the auditor's feet to the fire. Okay. But remember, you've got to do your due diligence on understanding the audit process as well. Okay, that is all I have. So again, any question, Susan? Anything more? Anyone want to unmute and ask questions or any comments?
The question is, can you list out allowable and non-allowable costs again?
Okay, so allowable costs are, what you have to do is go to, so Susan, I think you're showing the webinar, so I don't think I can, let me just stop sharing and see if I can get back into for you. So what you need to do is, I'm going to go back into the uniform guidance. I'm going to share, go back in where we were. I'm going to do it from this screen. Hang on, go here, uniform guidance, boom. Okay, I'm back in the uniform guidance, it should be. Okay, so we were stuck in the 300 section, correct? Okay, so now what I'm going to do is I'm going to go back, part 200. You want to get down to subpart E, cost principles. That's where so it's a 400, and cost principles are basically, I'm going to go back even a little bit more here. 200, I'm going to go to subpart E, cost principles. So in here, it's broken down into different groupings. So first, it is basically what applies. Here's where it says fixed amount awards don't apply, cost principles. Here is where your direct and indirect cost is. While I'm here and I've got 2 minutes, let me just go to that one that I wanted to share with you, 414. Let's go down to F. Okay, here's what it says, okay? Any non-federal entity does not have a current NICRA, U, except for American Indian tribes, which is not U, may elect to charge the de minimis rate of 10%, okay? Then it goes on to say this is new. It's not in the CDC version. No documentation is required to justify the 10% de minimis rate. Great, but I say as a taxpayer and as an auditor, I want to hold you to this level. As described in 403, which was allowable costs, those costs, all your 10% de minimis must be consistently, all your costs must be charged as either direct or indirect and can't be double charged or inconsistently charged. So again, given that it's not audited, I suggest to the missions, get some sense, ask for a cost policy statement, because the sentence above sort of holds them, doesn't mean you've got much leverage, but that second one I think does. Okay, so let me just go back where I was earlier. You asked about, I'm gonna go back out of 414. I'm gonna go down here. So what you're talking about here is the general provision for selected items of cost. It starts here at 420, and here is where they all are. I do recommend all of you print this because you never stop learning in the cost principles. So here there are 56 specific items that are potentially allowable or specifically not allowable. Okay, so you need to get to know these. So only certain type of advertising is allowable. Okay, bad debts are not allowable. Advisory council fees are meant to be charged as indirect costs. Alcohol, not allowed, never, ineligible. Okay, alumni activities, not allowed. Okay, audit costs, that's what I talked about before when I talked about you. And so what C says, primes may charge your award for these costs, but they must be A, B, and C, conducted in accordance with GAGAS, meaning some kind of audit firm, paid for by you, and limited in scope to what I said here. Okay, so let me give you the final advice from sort of Bob Strauss, okay? And that is any cost might be allowable if it is reasonable in amount, allocable, correctly allocable, and not specifically disallowed. So I just showed you some costs that were not allowed, alcohol, bad debts, but there's hundreds of costs out there that are unknowns. Communications cost used to be number 7 in the cost principles. It's no longer in here. There's no communications. You go down here, bad debts, bonding, collections. You don't see communications anymore. It used to be in here. Okay, why? Well, it's just a gray area. That's where we said under 407, okay, and while I still have 2 minutes, so this is where you find your specific costs that are allowed and not allowed. I'm going to go back one more and go to 407, which I think is where you need to be aware of that one. Okay, so let's go here. 407, this is the catch-all, the wonderful 407, which basically says you need prior approval for all these things down here. So use this as a cheat sheet, saying either prime for USAID to say, or me, the auditor, do you have any of these costs? Well, then you need prior approval. But here again, it says what it says in M1B. It says, in any given situation, you may not be aware of whether a cost is allowable or not. So to avoid later disallowance, you are allowed to ask, it says here cognizant agency, but for us, that's not, we're asking our agreement officer. Okay, so you may seek prior written approval from the agreement officer to get their concurrence. So this is what I say you all do. At the sub level, sorry, at any level, at the consortium level, when you submit your proposal with all of your costs, you identify, you have a column that says, great, 420 allows advertising, but I've got a certain type of advertising. Is that allowable? Okay, rent's allowable. My allocation policy is square footage or square meterage. Is that okay? Yes. I'm going to allocate my HR costs based on head count. Is that okay? Probably. I'm going to allocate my insurance based on the value of items insured. Is that okay? So once you've done that, basically that stops the auditor from asking questions, because once the AO has spoken, we auditors we don't stop asking questions. We're going to ask you to show me. You know, every auditor is a doubting Thomas, right? What we have is called professional skepticism, where we have to convince ourselves that the AO either approved it or you've given us some documentation for this. Okay, so that's where this 407 is incredibly useful, and I'm sure many of you do have many of these items. Okay, Susan, I think I'm over time, but again, I'm still available if anyone has questions. So anyone?
We have one more question. Just wanted to
Great.
know if you have an FAA and an agreement which is target-based and maybe a cooperative agreement, does all of this have to be considered to see if the threshold is reached for audit?
Okay, so a fixed amount award doesn't get included in the audit amounts. Okay, and I literally just before this, I was on with the Inspector General because the question came up in the morning. So a fixed amount, even if it's a USAID fixed amount award at the prime level, it's not going to be audited. Now, if you prime have given a fixed amount subaward, that will be in your CFA, right? Because you've got my revenues and my expenditures. So in there, you're going to have your salaries, your fringe, your program costs, and you're going to have subawards, and you could have fixed amount subawards. The amounts there, to you, that's just an expenditure. Okay, I'm not going to audit it. What I'm going to audit, if I'm your auditor, I'm going to look to see, did you get those deliverables? Your agreement was to get monthly reports. Show me you got the reports, done, tick. That's again, your job, subrecipient management team, is to make sure you did get that. To me, a fixed amount subaward is not much different from some sort of a purchase order. You're purchasing stuff and you're paying for it, full stop. Okay, good question. So it's not audited, and because I was just talking literally with Rob Mason, who is our fantastic rig over, the supervising rig, and we're talking about for all things recipients and auditors is, we are writing for the reader. The audit is for the reader, normally the agreement officer, to read. So if someone has a fixed amount subaward, then it wouldn't hurt to put that in a note into the audit. So it lets the reader understand, okay, this organization maybe was a subrecipient, but at the same time, they had a fixed amount subaward from this guy or someone else. And that just lets the reader have more information in case they want to ask. But auditors do not audit at any level a fixed amount award or subaward. Great. Guys, I am sorry to keep you late, but I hope it was helpful. Certainly do come back when the next time ASAP has these webinars. And as I say, we're always here to help you. So be successful, spend the money correctly, and repeat. It's like the old shampoo, wash, rinse, repeat. So really for us, it's get the money, spend it correctly, get audited, repeat, hopefully for 50 years. Okay, Susan, I think I'm going to turn it back over to you.
Sounds good. Thank you so much, Doug. I know for everybody it's a lot of information. Doug certainly has a ton of info to share with us. So if you missed anything at all, we do have the recording available for 30 days. I've put the link a couple of times in the chat, and we'll make sure that we have it online by tomorrow morning. So again, thank you so much to USAID and PEPFAR for allowing us to put on these webinars each week. We look forward to sharing future ones with you, and have a wonderful day, everyone.